kind of policy, no surprises at all, no extra steps, but policy stands. So if there is excess liquidity, that is if the call rate is declining, it's not standing at 6.5, then chances are they are going to come and sell bonds, and that's what we did before. But that as a parting shot can be considered a fairly important, is changing the game plan for banks and for bond markets. The important point is the July, August, September quarter. Already in July and August, we have 6.8. So even assuming we get some 5.2, the overall forecast for, that's important, that they've not raised it too much. And for the full year, no change at all, which is a very benign, should be considered a soft, a dovish signal. They are not going to be happy with 5.2, which is the inflation forecast for Q1 of next change from the previous time. So all in all, I would say in terms of action, that warning of we will sell bonds. When you sell bonds, you're tightening liquidity. That is the only warning that can be seen as hawkish. And then they're saying that we want to go back to 4. Otherwise, it looks like status quo. But let me come to you. Upasana first. Upasana, what did you make of it?
Lata, you correctly pointed out, broadly, it is a very with expectations policy. But I'd like to highlight two aspects here. One is, since August, we would see that RBI has been emphasizing on their shift in stance towards a tighter liquidity. And that's, again, something which they have reiterated this time as well. Of course, through a reference of OMO sales if required. So they're going to be very micromanaging liquidity. I think they will be using all possible tools in the finely balanced way, but they would be micromanaging liquidity. And that is an effective way to go ahead, I believe, at this point in time when global environment is extremely volatile, despite maintaining a pause or a prolonged pause on the repo rate. So I think this is one big takeaway from today's policy. And yes, the other important point, like you already highlighted, was that there is no, the fight against inflation is not done with, and they're not getting away with just a 5% or a 5.5% inflation reading and draw comfort from that. Clearly, 4% is their target, and until that is not achieved on a consistent basis, they're not going to lower their guards. So I think these are two important takeaways from here. And on the inflation forecast, again, we are broadly in sync, but yes, I think for the second quarter, we are at 6.5% as against RBI 6.4%. And overall, we still see that 5.4% is achievable. So I think internally, we are different in quarterly profiles, but broadly 5.4 is where we are for the full year.
Okay, that's important. That could be taken as dovish. Rajiv, as a bond person, Rajiv Radhakrishnan is heads the Chief Investment Officer at SBI Mutual Fund. Any movement in the yields? I can't see the yields now. I think it's 7.14. Was it unchanged? And near-term yields, swaps, how was the bond market taking this?
Yeah, I think very clearly the OMO announcement or the threat of OMO probably wasn't really factored in. So the immediate reaction has been yields have gone up by about 7-8 basis when I last saw, including swaps. But then WSS, the RBI had anyway been doing small lot OMOs on the screen, which I remember the last was about net 5,000 crores they've already sold. But yeah, the threat of an OMO was probably negatively today.
That yields will now trade at a slightly higher range. Anything on the market at all? You think it just hugs the 6.75 mark?
Liquidity comes back to the system, I would say that it goes back closer to where the policy, I think, and this is something that probably the RBI would want to minute situation where there is a significant deviation of the overnight or the WSCR below that one may see when liquidity returns. So in the near term, I do expect a repo rate rather than staying at the upper end.
So Sethi, just waiting to hear what you have to say. There is some change at all? Any rules that you took away?
Nothing much changes. I think the policy announcements are continues to be on inflation, and more emphatically through tighter liquidity management. Banks for this tighter liquidity conditions for longer time. See how it plays out. I think as pointed out, the ICE is our estimate. and also some bit of government expenditure is adding to the liquidity. Immediately, there will not be a great impact. It will be some easing there. But as Governor mentioned in his speech, the bank accounts, so that also adds to a bit of liquidity in the overall system.
Okay. Any guess at all? At the banking sector perspective, do you see deposit rates inch up?
I don't think there will be any major impact on the rate movement, because the increase in the policy rates is still, transmission is in several reasons. One is, of course, everybody wants to try to project their margins. Margin compression is one of the important areas. But as the demand for deposits grow, interest rates, if not across the board, in some of the maturities, which are more.
Mr. Khajuria is also with us, Mr. Ashutosh. What did you make of, some of the, of course, no change in rates and stance and the threat of the OMO when it comes to project financing related rules being tinkered?
OMO sales certainly are more like, Damocles sword, as far as this is the reason why there is some bearish sentiment mood in. So we have seen, the yields shooting. That certainly has impacted our market as well. But as coming back, that ICRR impounded part. So from tomorrow, probably the liquidity would be back, but then there is a threat of, or rather, the risk of, the bonds being sold by RBI. On project finance, we'll wait for the details to come in and all. Probably we are gradually moving towards the global standards on recognition and all. So I would just say that right now. Let's see the details once the circular comes out.
Okay. Well, Mr. Sethi, I wanted to ask you what you made of the governor's insistence. I mean, he said it in detail that they are very carefully monitoring data on personal loans. And therefore, any change in terms of how SBI or banks in general, because the governor is raising it and this is not the first time. Do you think the attitude to personal loans can go? They've not announced steps, but will you all put in more defenses, lower the pace of growth?
I think the governor probably meant unsecured personal loans. Most of the personal loans are given in the form of unsecured personal loans. So I think the system level unsecured personal loans is showing a significant rise. And as you know, many of the NBFCs and banks find it easier to dispense unsecured personal loans. But much of it is data-based, based on the past credit history and also the salary which comes into the account. As long as it is cash flow-based unsecured personal loans, I don't think there is any greater concern on that. But a significant rise in personal loans probably is bothering the RBI. So that is, I think, as you said, this is the second time governor mentioned in this MPC. While I keep saying, Lata, that personal loans differ from one lender to another, most of us in the public sector banking space are our personal loans, particularly on the unsecured personal loans, are very strongly backed by the salary flows. So I don't think we have any great concern in terms of the quality of these loans. But much of the system, particularly among the NBFCs and the personal loans, do not have that kind of backup of salary accounts. So maybe the concern is emanating from that. We'll have to see. Currently, of course, there has not been any significant rise in the capital allocation or risk weights of these personal loans announced in this MPC. But obviously, the concerns will be noted by many lenders.
Yeah, they've stopped short of trying to make it expensive for the banks, but let it off with a warning. Mr. Khajuria, just that last question to you. Will you all slow down unsecured personal loans or ask for, higher interest rate? Any way you will change your attitude to unsecured personal loans?
See, Lata, actually, for us, the base itself is very small. So I think we, at current level, we are hardly 2.5 to 3% of our total loan book. Now, personal loan, if you are just talking of unsecured part, but if you're talking of personal loans in the form of, say, auto loans or housing loan and all, because personal loans are understood, in two different ways. One is the loans given to individuals. If that be the case, then of course housing loan would continue the way it has been doing. But if the concern of governor, which was more on the unsecured side, like your credit cards and your consumption loans and all, there of course with the so-called nudge, as well as the alerts raised by the regulator are suggesting that the growth in the system is quite steep, and therefore a need to rein in the rate of growth. So I think on that count, but if you're asking about our bank, we have a very small base, so may not be really impacting us a lot.
Well, perhaps the concern on personal loans, especially unsecured personal loans, is also stemming from the fact that a lot of new companies, fintechs, are aggressively expanding in the segment. But we'll come to that. Kaushik, a quick word from you as well, on your key takeaways and the fact that the governor emphatically said the focus is on 4%, not 2 to 6% inflation. What does that mean in terms of how long we stay at 6.5%?
So, yeah, Ritu, I said in the pre-policy show that there would be some surprise. Every policy you'll not have complete unchanged. So this has come as a surprise to the market because people were not expecting OMO sale. Rajiv mentioned that they were doing around 5,000 crore on the screen. But if they announce OMO, obviously bond markets have reacted negatively. Now the question is whether if liquidity absorption is the main issue, then could it have been done through a CRR hike or not? Now, RBI was reversing the ICRR. So doing CRR hike would have looked a little strange. So maybe because of that reason, they have, decided probably to go ahead with the OMO sale if required. There could be another consideration is that if you see the US 10-year treasury, it has moved up so much, whereas Indian 10-year bonds have not moved that much. And therefore, the spread between the two has kind of come up to 250 basis points or lower. Probably one reason, for doing OMO sale and not CRR is to make sure that the differential doesn't narrow even, more, because otherwise then, people will not see an incentive offshore investors to buy government bonds in India if they're getting such a high yield in US. Why would I invest in India when the, differential is so narrow? So one reason could be to drive it higher and at the same time take care of liquidity. On inflation, things are looking actually better. RBI has not changed their forecast either the full year or the first half of 24. They have kept it 5.2 if you see the forecast that they have given. And the thing is that they have mentioned that inflation expectations have fallen to single digit for the first time since COVID. So everything was going fine and was actually on the dovish side. And if you see the forecast that they've given for July, September, they've said that 6.4% is the average, going up from 6.2. If you back calculate, we have already got the July-August data. So September inflation actually should come below 5.2% to get that 6.4% average. So you are going to expect inflation to come quite significantly lower next week for September. So all this is fine, but the theme for globally as well as in India is higher for longer. So I would expect this to continue for another 6 months at least. And probably in April, RBI will consider cutting rates because by that time, when you come to April, you'll see the July-September of next year inflation forecast, which RBI has not given out. Next policy they'll give. Inflation average will fall below 4% in that particular quarter because this time it is going to be 6.4%. So I think April would be a good time when RBI will start considering cutting rates. But for the next 6 months, we're going to be high for longer and liquidity will remain tight. And RBI will ensure that the short-term rates do not fall below the repo rate of 650. And as far as the OMO quantum is concerned, if you were expecting, say, 50 basis point CRR hike, that would have been close to 1 trillion INR. So you could expect close to 1 trillion OMO over 3 months. So 35,000 crore per month over October, November, December.
Okay. Got that. Very quickly, Mr. Sethi, the governor has let off with a warning that banks are putting idle money in SDF, but they're not lending in the call market, with the result that simultaneously there are people borrowing from MSF and just dumping in SDF. You think this verbal warning is enough? Soumya was asking for actually extension of CCIL timing. Is that a disappointment that it didn't come?
Yeah, I think that would have really helped. In fact, we also have made references to the RBI that some extended hours would be helpful. Hopefully, I think RBI may consider outside the policy announcements. But as far as SDF is concerned, also we must also remember that some of the funding in SDF is also to take care of 24/7 RTGS and NEFT requirements. But it is imperative that the banks should, with excess liquidity, should start lending in the MSF, which major banks like SBI normally do. That will definitely bring down the weighted average rates in the call money.
Okay. Thank you, sir. Thank you very much, Mr. Sethi. Ritu, over to you.
Well, Upasana, a quick word from you on the inflation projection. No major changes, slight tinkering for the second half of this year. But do you think any upside risks to these numbers that RBI has given? What is your own projection?
We are at 5.4%. So like I said, for the full year, there's not much of a deviation. Yes, within quarters, we are slightly different as compared to RBI. But I think broadly, there could be a 10 to 15 basis upside, if at all, to the overall headline number for the full year. So that's not a material uptrend or upside risk that we're talking about at this point in time. Like Kaushik mentioned, next year is going to be much more crucial, I think, from a policy stance point of view. And I think we are looking at 5.3% in the first quarter, which is RBI's compared to RBI's 5.2%. So broadly there again. Beyond that, there is a strong base effect, which will be helping inflation trend lower and fairly comfortable before the end of FY25, which again comes closer to 5%. So, I think not before mid next year is where we can expect a shift in the policy rate cutting cycle. I think that pivot probably will not happen before the middle of next year, not in April, not in June. Probably from August onwards, we can start expecting some changes that could come about in the policy rate cycle.
Okay. Well, I would request all of you to look at the MPR. The Monetary Policy Report has been published. Took me a while to download here in RBI. The connection is a little bad. Please go to page 6 and 7 and you have the inflation projection for next year. So there the CPI for Q4 24-25 is projected at 4.3%. That's the maximum confidence interval. Now, that's the only thing we have. Indicate that the inflation will average 4.5%. And the range is 3.8 to 5.2. Now, these are very important numbers. Kaushik, Upasana in particular, if you all are listening, they're expecting next year's average to be 4.5, very good. I mean, pretty close to 4. This year's average is 5.4. And the range is 3.8 to 5.2. So the maximum that inflation goes to is 5.2. And they end the year with 4.3. Now, Kaushik, does this advance your rate cut expectation or impact it in any way? Page 7 of MPR, please, everyone.
Yeah, I'm already, looking for a rate cut in April, so I don't want to advance it anymore. And I was in April when people were expecting 6 months back in October, December. So I've kept it constant. I told you that they had this forecast of 4.4% for January, March 25. They have actually reduced it by 10 basis points to 4.3. If you're saying it's 4.3, earlier it was 4.4. So if you look at the longer term forecast, and if you're saying the average for FY25 is 4.5, then the question boils down to how much real interest rate, positive real interest rate is enough. And if you think 100, 120 basis points is enough, then repo rate at 650 or, the short-term rates at 675, they can easily come down by 75, 100 basis points by the end of next year. And even then, you will have real interest rates positive by 100 basis points. Because if your policy rate comes down to 550, 575, and your inflation is at 4.5, you still have 100 basis points positive real rate. So that's why I think if inflation is on track, and we know that July, September next year, you'll have inflation below 4%. It'll be probably averaging 3.7 for that quarter. Certain months, you'll get inflation below 3% for the month of July. because we had 7.44 in this particular July. Next July, if you don't get that kind of shock in tomato prices, you'll see inflation falling below 3%. So I think April would be a good time to start cutting rates, and they could go as much as 75 to 100 basis points.
Okay. Okay, Kaushik, we have to wind up very quickly. The GDP figures for next year have been given, 6.5% as they said earlier, and the quarterly growth rates, the range is 6.3 to 6.6. So that's a fairly resilient outlook that they have. Same growth rate as this year in spite of all the global headwinds, tightening policies all over the world. In spite of it, the Reserve Bank has a fairly resilient outlook. Just one quick word, Upasana, first rate cut, please make it brief.
Not before August policy next year.
All right, all right. I'll hand it over to you, Ritu. Thank you very much, everybody, Mr. Sethi, Mr. Khajuria, Rajiv Radhakrishnan, Upasana and Kaushik. Ritu, final comments?
Well, I think apart from the policy and liquidity related measures, the non-policy measures, I think that's what we'll now watch out for, whether it is the project financing rules, any further action from banks on the personal loan side. But on that note, we're going to wrap up this special discussion on the Reserve Bank of India's monetary policy. No change in the rates at 6.5%, no change in the stance, the warning of an OMO even as we approach this festive season, and that incremental CRR of 50,000 crores coming back in the system starting tomorrow. On that note, it's a wrap up from all of us. Goodbye and thanks for watching. Stay with CNBC-TV18 for more news and updates.